ADP. A few minutes. Grab your coffee. Doing? Saying I have slow internet, is that right? No. 250's not that slow. It's enough. Let me check my upload speed. Doing over 300 upload. I don't know what YouTube's talking about. Hang on, I'm just closing windows, closing windows, closing windows. It's like a game. How many windows can I close? Maybe that's what's slowing it. Can't figure it out. YouTube just says it's not receiving enough information. Sending it 320 megs upload, not download, upload. So, I guess we'll get on with it. Alright, now I just got to figure out where the music's coming from. It's way over there. Alright, good morning everybody. Happy ADP day. Another dumb prediction. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So, my name is Wayne. How are you doing? We have ADP, then we have Bank of Canada, then we have JP, and then what? Oh, I got one of these things again, huh? Ah, look how dirty the desk is, huh? Dirty. Clean that up. Hey, if you don't eat dinner, if you don't eat food at your desk, you're not a Forex trader. Yeah, anywho. So, what's up? We got all this news, we got all this volatility, and we're trying to figure out what the Fed is doing. All right. Cool. So, let's do some trade planning, huh? Let's watch the news come out. Oh, we got just 1 minute, so why don't we go over there? I have a Goldie trade going. I'm a Goldie long. Now I can tell you ADP, based on the past, is not the most interesting thing today. The Bank of Canada interest rate decision is more predictable. It might not have more volatility, but it's more predictable. IVPMI at 10 is, once again, maybe not more volatile than ADP. Maybe it is, maybe it's not. But that's not the issue. You don't want random volatility. You want predictable volatility. And my analysis of these news events, going back years of price action in response to the news, is that you don't really have to get too excited until around 9:45 a.m. today, which is after the stock market, which is after ADP. So don't worry about it. Yeah. 140, huh? $140K. Nice. I want to see if I have a quant box open. So we expected 149. This is the new quant box calendar released this morning. Okay, so 149, 140. Cool. That's decent. So later today, things get more interesting. Canadian Bank of Canada interest rate decision expected to be at 5.0. And then really the news today is the testimony by Jay Powell. But we can look at the Bank of Canada interest rate decision. And I think one tidbit that's interesting is that it always comes out as expected. There has not been a situation where they've surprised. So it's expected they keep interest rates the same. So statistically speaking, it's going to be 5. So what would you like to trade in response to the Canadian interest rate decision today? What currency pair, what out of the majors, are you thinking? Don't do Hungarian franc versus Swiss franc. No. What pair would you likely trade? Let me know, and I'll tell you how to predict the future. Yeah, that makes sense. What's up, Silly Sally? I'm in. Yeah, USD CAD makes sense. Well, did you know there's a 70% chance if you look at past performance, which, hey, National Futures Association, please hear this. I'm going to tell everybody that past performance does not predict future results. Cool. With that being said, we can look at the past and see if we can discern any pattern. It's not predictive. This is research. And over the next 12 hours, there's a 70% chance of up for 12 hours. January 24th, 2024, up for 24 hours. 12 hours. The 12th of July, 2023. I don't know why it's out of order, but it is. Up for 12 hours. March 8th, 2023. Up for 12 hours. January 25th, 2023. Up for 12 hours. Now, going back to 2022, there was a surprise for the first time. Down. Whoa, what? So we had January, July, March, January. They were all as expected. Up, up, up. And then there was a surprise cut back in October 26, 2022, and it dropped. Oh. So anyways, going all the way back to 2021, in particular looking at where there was as expected. So 1, 2, 3, right? 4, 5, 6, 7, 8, all the way up. You look at all these events. This is literally what my AI is saying. We can draw the following conclusions about the expected movement of USD CAD based on the last 12 Bank of Canada interest rate decision events. If the actual is equal to consensus. If the Bank of Canada pauses, 70% chance that the 12-hour trend will be up. And then I can prove it to you with charts. And you're like, wait, what? Yeah, I can do this. I can show you all the charts. And it's crazy. It's beautiful. Let me just do a snip. Just to whet your appetite. Okay, first of all, let me get rid of that. And so it doesn't just give you a direction. It tells you how it tells you how it did the analysis. You see all the different ups in the past? And it's doing this over and over and over, right? So anyways, pretty cool. All right, so my kitty cat's working. I don't know how long it's going to work, however, but I think I can move my stop to break even. Okay, my target's a little higher, and we got to get through hardcore resistance. So let me remove that. And we got to get through this, right? This line in the sand is going to be tricky, isn't it? By the way, this is yesterday's trade plan that we did here. You and I. You and me. Very, very simple trading. I now have opportunity with no risk. Cool. I'd like to do that a lot. I'd love to have opportunity and remove the risk. What happens after then? Well, I don't know. Well, how long, Sal, are you talking? 100 years? 5 years? 5 months? Long term isn't 3 months, bro. Oh, dude, you just made my day. That's so funny. Well, I answered that question 3 months ago for $4.44. Yeah. That's so funny. Yeah. But still. Yeah. Whatever. Yeah. Why don't you just use seasonality? Why would you ask me my opinion? Why wouldn't you just use seasonality and look at what is historically accurate if you're only thinking 3 months? If you want to know sort of my esoteric vision for the dollar, yeah, okay, go ahead. But even then, it's more story time than reality. But you should never ask somebody what they think about the dollar. Who cares? Just look at seasonality. Yeah. Just look at the facts, right? Yeah. I I think exactly what seasonality tells me. I think the ebb and flow of demand for capital is how I look at the markets. There are times when I'm a buyer of the dollar. There are times when I'm a seller of the dollar. I've always been that way. Okay? For example, I would give you a different answer at the end of March than the beginning of March. I would give you a different answer on Canada Day. I would give you a different answer in September. I would give you a different answer in September of a 4-year political cycle than I would in the third year of a 4-year political cycle. So, like, if you're only thinking 3 months in advance, then my only answer is I trade the flow of capital. I'm indifferent. Okay? Right? It's like asking a farmer, do you prefer the second week of April or the third week of April? You're like, I go out there somewhere around April when the conditions are right, but other than that, I'm indifferent. I don't really care. If it's raining in the second week but not in the third week, then I'm going in the third week. Yeah. So anyways, yeah, but long term is not 3 months. Yeah. Cool. So therefore, try QuantBox, bro. I break it down not only month by month, but week by week, which actually brings up a really cool point. So thank you for bringing that up. Let me go to youtube.com. youtube.com. I actually discussed that today, and we break it down not just monthly, but weekly. And, oh, there's the new calendar. Look at me all happy. What's wrong with that dude? Why is he so happy all the time? Yes, Al, and that's the problem. Look, let's say it this way. And I'm not talking to you. I'm talking to everyone that is watching that is never in a trade more than a week. Look, you're probably here because you're frustrated. You're not getting the results that you expect, or that you have been pitched by some unscrupulous guru. The only way you're right, the only way to succeed is through building portfolios. Okay? Mathematically, if you took the time and you did the mathematics behind skippity scalp, skippity scalp, skippity scalp all day, every day, it can work in the short run, but on the long run, it never adds up to anything. Eventually, too, you break down. Your focus breaks down, or your body breaks down. It's too hard to sit in front of your charts 12 hours a day, skippity scalp, and at the end of the day, you walk away with an empty portfolio. Okay? So what you want to do is compound your winners, and the only way to do that is to let your winners run. Okay, and now, if you are only, let's say, only a day trader, I'm not even talking about skippity scalpers now, day traders, where you enter in a couple of trades a day, and then you take profit, and then you have nothing, and tomorrow you enter a couple of trades, right? Tomorrow you enter a couple of trades, and then at the end of tomorrow you close. You're never going to make it. And I just invite you to stop trading for a bit. and spend some time thinking about it. Bust out an Excel spreadsheet and start planning. And you're like, okay, you make 3 trades a day. Most of them you close overnight or after a day or two. And just do the math. What's your lot size? What's your win ratio and all that kind of stuff? And it will take you 692 years to make any serious money. Because you give just as much back as you make, and you need to get to a ridiculously high win rate to compound or build, which is, aiming for targets just outside your reach. But then what ends up happening too is you start paying yourself money, right? Because now you also want to pay your rent with your Forex money. But then once again, you're not compounding. So you're 60% winners, 40% losers and break-evens. And then you take, and they're only 2 or 3 a day. So what is that? Basically 2 winners a day, 1 loser, 1 break-even a day. Well, at the end of a week or at the end of the month, it's not serious money. And then you take money out to pay for, I don't know, car insurance or something, and you've just taken out 50, 60% of your profits, and it never goes anywhere. It just doesn't even make sense mathematically. So, like before I was a Forex trader, I was a venture capitalist, right? So you would just do the numbers on business models. And you're like, I think having to achieve a 75% success rate is too high. And your lot size also is probably too high because you make so little number of pips that now you need each pip to be worth a lot of money. So therefore you got to increase your lot size, but that's the exact recipe for failure. Yes, no, I agree with that. That might be an opportunity, Sal, but look, you can't have a stupid business model. And I'm not talking the prop firm. I'm talking about the traders that want to work for a prop firm. They walk in and they want to be a baller hedge fund trader. They want to drive Lamborghinis and live in a mansion and party with girls in bikinis on their yacht. And those little boys fail. Because there's nothing. It's just dead air between the ears. Oh my God, Wayne, that's harsh. Yeah, well, do a business model. Build a business. Build a sustainable business. And so even if you're funded with prop fund money, you still should have a business model that makes mathematical financial sense. Okay? So okay, you get some money, you get some funded by a prop firm, great. I will help you do that. But the thing is, once again, if the vast majority of your trades are just 2 or 3 trades a day, you see what I mean? If you're only doing 2 or 3 trades a day and then you're closing the trades at the end of the day, the model doesn't make any sense. Now, if you're doing 100 trades a day with much smaller lot sizes, now you have a better data set. You have a better sample size. But again, I don't know if a prop firm would allow that. But what I'm saying is you probably want more than 3. Okay? Now, if you're only doing 3, why only 3? Are you not putting in 12 hours a day? I thought this was a job for you. I thought you wanted to drive yellow Lamborghinis, and you got that because you did an amazing amount of work. Well, 3 trades are not going to cut it. Well, unless you let them run and you're going for hundreds of pips, not tens of pips. So, Amin, what happens when you have a better sample size is that you remove luck from your trading. And for most of us, if not all of us, that luck more often than not is bad luck. Oh, you were in a good trade, but ADP. Oh, you were in a good trade, but Jay Powell. Oh, but the Bank of Canada. And there's all these excuses, right? Well, if you started with a larger sample size, you end up removing luck. And you get a better mathematical norm. But if you only make 3 trades a day and you get unlucky because of the Bank of Canada news or the ADP news, and it takes you out of your 3 trades, you just wasted an entire day. But if you're doing 1 or 2 or 3 trades an hour, you're like, oh, so you bust out on those. Well, you got a bunch more coming, and you regroup and re-strategize, and and you have more opportunities. And what happens is you get a more consistent mean. And then you can fall back and say, well, because you're hardcore disciplined, 62% of the time you'll be right every time. Right? But if you're only doing 1 or 2 a day, then I suggest instead of going for, we'll say 33 pips, right? So instead of, how about this? Choose it this way. 9 trades a day or 3 trades a day. Okay? So you're either going for 33 pips each or you're going for 333 pips each. And so you can be a swing trader that trades every day. But your behavior needs to match your strategy. And the comment was, most people listening to this are not in trades for very long. Well, then you're doing the wrong strategy. For your behavior doesn't reflect your strategy, and therefore you're not getting the results that you expected. Well, you're not matching things up properly. And it's usually not your fault. Usually it's just that you don't know. Or even worse, some idiot guru on YouTube taught you nonsense. Well, that's even worse, because now I have to unteach that and then teach you how to do it right. Okay? Now, you're lucky that prop firms are becoming legitimate, because it makes more sense if, let's say 80% of the profit goes to your pocket, then you don't need a lot of money. But if 80% went to the client's pocket and you got to keep 20, well, then you need to raise a lot more money to make any decent cash. And even millions of dollars doesn't pay you really enough. But it's hard to raise millions of dollars, right? And then you have compliance and customer service and accounting and taxes and all these things that make really running your first hedge fund quite difficult and quite expensive and daunting if you've never even run a business before. So if I say bust out an Excel spreadsheet and just do a perform a cash flow statement on this trading strategy that you're doing right now, and you're like, Wayne, I'm totally incapable of doing something like that. Well, don't dream that you can run your own hedge fund. Right? So what I'm saying is if prop firms become legit, which they might be, oh my God, well, there's a half-decent way that you probably can make some half-decent money. Yeah. Your first 5 or 10 grand, sweet. what percentage of foreign ex, what percentage of prop fund traders are making, let's say, 100 grand a year? My guess is it's probably still low, but I don't know. So I'm going to start talking to some of these groups. But can we get you to a couple of grand a week? Yeah, I hope so. Is there a logical path that I can follow? Because very often in the beginning, these prop firms were just giving sales pitches to poor, desperate people that had no idea what they were doing. It didn't make any sense. But someone's like, oh my God, I could pay $200 and suddenly be trading $1 million and then I will be rich. No, bro, no. So anyways, I want to teach you how to build a sustainable business. Does anybody follow that vision? That trading and investing is a small business, and that the secret sauce is being in business and providing value as long as possible? Yeah. Then you have to, we have to filter through a lot of the noise. Yeah. But not get rich quick, right? If you have gray hairs, you've probably seen a lot of things over your years on this rock floating around the sun. You've heard a lot of bullshit. So you're like, Yeah, Now the kids still want to change the world. Yeah. So you're right. They don't have the experience. They haven't seen the levels of bullshit that's out there. Right. Mike, I looked at doing that, and I kind of actually did, to be frank with you, Mike, to be Mike with you. I don't want to do it. No. I did try a couple of times. No, it's just, no. I'll help you get it done. I just don't want to do it. I like, put it this way. I like trading and investing. I don't want to run a prop shop. I don't want to run a prop shop. I want to trade. Okay? I'm sure I can make a business of it, but it'd be a business doing what I don't want to do. So if there are others that want to spend their whole day running prop shops and they're legitimate, well, hell, I'll help you get in there and I'll help you make a bunch of money. That would make me happy. But, okay. God, that actually would be terrible. All right. All right. So we got a little Goldie going. Fine. Bank of Canada. It's still an hour. Oh, is it an hour? Yeah, I think it's an hour, right? Oh my God. What am I going to do until then? 59 minutes and 18 seconds. So we had a question, or I had a question earlier today about calendars and are they real time? And so the new QuantBox calendar is not, because of the way QuantBox works. It's just not instant real time. Now, traders, and I'm assuming everybody here is signed up to be on the Whisper launch, right? Traders is real time. And so I'm looking at the Traders scalper tool, and it's focused, and it's ticking down. It says 58 minutes and 24 seconds, 23, 22, 21, 20, 19, 18. It's counting the seconds down to the Bank of Canada interest rate decision. When we get closer, like in the first few minutes, it'll start glowing and pulsing. Dude, heads up, Bank of Canada interest rate decision imminent. And then when the event occurs and the information is released, it just instantly updates, and it does more than just give you the number. What it's been doing, and I told you this before, and I guess I can just give you, well, this is not a good one because it only says one direction. I can give you like tomorrow's Canadian interest rate, tomorrow's Canadian news. I just want to show you the real-time complexity of this tool. Okay. All right. And so what this is for tomorrow at 8:30 a.m. Canadian balance of trade. If it's less than actual, here's what's expected to happen. Broop, 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 broop. Look at this. 83.3% chance Aussie dollar drops for 2 hours if balance of trade from Canada is less than expected. And it goes through all the different pairs with multiple time frames, right? Both scalping, day trading. And then, well, what if its actual is greater than expected? And it goes through that. And what if actual is as expected, right? So it has all these scenarios. And by the way, you can click and drill into all of this. So this is all clickable and you can get more and more and more intelligence. But as it gets to 8:30 tomorrow, and let's say it comes out less than expected, it deletes all this information below. And then it opens up and it writes, hey, for example, 83% chance Aussie dollar is going to go down now, right? This kind of stuff, right? And it changes the pages dynamically. This is not a web page like you typically see on a calendar on a website. It's a database. So without you doing anything, without you refreshing the page, the page changes. Content is added, content is removed. And it says in the English language what to do. Okay, and I'll give you an example of what that would look like. It would look something like this. There, oop. It'll look like something like this. We can draw the following conclusions, right? And so if it came out less than expected, this would go away. And it would just tell you, okay, the actual was less than expected. 83.3% chance the 2 hour trend will be down. And then all of these are clickable and you can see all the past charts. Sorry, I got multiple drawing tools on top of multiple drawing tools and I can't figure out which one's which. Okay? So anyways, pretty sweet. And all in real time and all fast. Okay? Artifact says, yeah, man, that talking about me like running a prop fund, that would be like work. Yeah, I haven't had a job for 20, 22, 23 years. Why would I want a job? Right? Look at this face. I'm too pretty for a job. So anyways, let's take a look at the stock market. And could be a great hedging day. Is anyone going to take it down? So we have this fibbed up, right? But you should know by now that this is a possible reverse fib scenario. Yeah, baby. Yeah, we call these fib wars. I'm trying to fit this in. Fib wars. Okay, we call these fib wars. And it might be game on like right now. Like what I mean is, okay, you see this little zone here? If I were me, I would be on this chart now looking for reasons to sell. Just give me one reason and I'll turn it right around. No, that's not a cowboy song, by the way. Tracy Chapman wrote that song. It's a Tracy Chapman song. Not that cowboy that sings it. And I'm like, dude, that's not your song. Now, recalculate time says what needs to happen for Japan to raise interest rates. I was expecting yen strength by now. They are late. Well, yen strength doesn't appear until July, right? Or June? So we got that. So that would be normal. So what you're already saying, recalculate time, is you're waiting for Japan to raise interest rates. Okay, that makes sense. But you're expecting strength by now. Why? That part I don't understand. Why? You would be out of sync of normality. Okay? Seasonality suggests that yen would be weak right now. So, for example, let me talk about normality. I don't have QuantBox in front of me right this second, but I'll tell you what is in my mind. Normally, I'd be buying dollar right now, and normally I'd be selling yen. And most of the year, that does not happen. And right now, that is not happening this year. But normally, that's the situation I find myself in. So I would expect yen to be more weak than strong, but I do expect yen to get strong. And could it be getting strong now? Yes. Yes, it could. And probably somewhere around 10:30, Jay Powell will make it clear that the Fed is not going to raise interest rates imminently. Okay. BOJ pivot might be the reason. Well, that is the reason, Don Pablo. The thing is, when is the pivot? So it might be closer to when the yen normally strengthens. Okay? Well, no, recalculate time, right? You were thinking that they've been weak for an extremely long time, only 2 years, and nothing is normal in seasonality is what? No, because that is in the data. Okay, there's an ebb and flow. Okay, so Frank talks about Japanese repatriation. That has to do with taxes. That's the same this year as last year and the year before and the year before. Okay? So my point recalculation is the way, at least the way you're writing your language. How about this? Recalculate time. Your language suggests that you're guessing, and all I'm suggesting is why guess. So you listen to Bank of Japan meetings. You read the Bank of Japan reports. And you also try to line up what they're saying with what normally happens anyways. And we don't know necessarily why these things happen, but maybe Japanese car dealerships in the United States place orders at a certain type of year for the next year model of Honda and Toyota. Or big factories that buy big Mitsubishi machines. They do it in a normal time of the year. There may be seasonality to other businesses that do business with Japan. Or maybe it has to do when Japan imports raw material or energy products. And these contracts get settled in yens and dollars. And that creates a normal ebb and flow. Money going back to Japan, again, for taxation purposes, or to avoid, and leaving Japan to avoid taxation. There's a normal cycle. And a lot gets incorporated into that. So I would be paying attention to what you believe the monetary policy is in Japan now. What are the people in charge of the monetary policy in Japan saying right now? And when would the logical time be for the Bank of Japan to maybe change that policy, like raising interest rates from negative 0.1 all the way up to 0? And would that actually rock the world? Maybe. But if you could line that up to when the yen normally gets strong anyways, maybe there's some congruency. Okay? But this idea like it's been so weak that it can't stay weak, not good thinking. Okay? That is not quality research to say, well, it's been so weak it can't stay weak. That's, and I'm being brutal here, but that kind of thinking leads to bankruptcy. Oh, it can't, these yen pairs can't keep going up. Oh, yes, they can. They will go up forever and ever and ever and ever and ever and ever until they stop going up. Okay? Or, right, so like we have this going up right now, and I have it set like, hey, this is where it should fall. Well, I'm watching it. Okay? But this can go up forever. I'm concerned about this asset and only on the short run. And in the short run, I might need to hedge. But I'm long. I own the NASDAQ. Heck yeah. So you have to, I would suggest, line up your shorter term, and really what you're talking about is medium term, with your much longer term. So I agree the yen pairs can come down, and I would suspect sometime this year will come down. But don't bet on it. Yeah, and don't think. Do the research. Show me the data. Because thinking is just an opinion. Okay? Okay, Aussie's not good to go. Not on that time frame. You can look at Beast. Okay. Yeah. Actually, let me reset this because this is on the old trade plan still. Indicators. Biased. All right. So if you were a bear, recalculate time. You set up your daily pivots bearishly. Okay. And you would have a trade plan. Now, it's different from the one that I had. yesterday I had this still pointing up, and I thought there was still a chance of something like this. Okay? That's one thought process. The next thought process is now we have a move like this. So what's your game? How do you handle this? Oh, well, have you considered joining Investor Bootcamp? I mean, I read the reports with people. I spent an hour and a half downloading reports yesterday and reading them and discussing them with our group. I have a bachelor's degree in macroeconomics, so I'm somewhat qualified. All right, so both of these are valid, and I don't even care which one you are, but you need to be one of them. Okay. So for example, you might have shorted here and broke even. Okay. No trade the next day. I mean, this, would you short a higher high? No. So no trade the second day. This trade, with the failure of a higher high, could you sell this? Yes. Target is there. Could you try it again at London Open? So that's Asia Open. Could you do it again at London Open? Yeah. But I would hang on for 2 days. They're two different trades for me. So this is, okay, this is a failed lower low. You would have tried and somewhere up here took a loss or a break even. Then nothing appeared the next day because it was the same stupid trade that failed the first one. And then this is not a sell, it's a higher high, but this is a sell. And this is a sell. Okay. And here's the next day if there's sells. And that would be bears winning on this rollover. Cool. But has the monetary policy changed in Japan? No. Are people worried about it? Yes. Now, the number that I've been sharing with you over and over and over again is this one. Okay? And that is your old man easing into a hot bath. There's actually a picture in my book that looks nearly precisely this. Okay? Failed higher high. Uh-oh. 100% pullback. Uh-oh. Top, bottom, top, breach, pullback, gone. And that could be enough for you technically. Okay? Well, recalculate, it's $88 for a year. Oh, but wait, no, but to join, yeah. Yeah. Yeah, it's $99 a month. You're right. All right. So we call that an old man easing into a hot bath. So could this give you permission to buy buy yen versus everything, which means sell yen pairs? Yeah. So you could do that on Beast. Oh, yeah. Okay. Could you do it here? Yeah. Well, this one I pointed out for you guys as well, where, okay, you have the big drop. So you fib it, right? You do a fib. 3A2, 50%, 618. And you take it down. Yeah. Yeah. So what are you going to do, recalculate time? Are you going to Uber in the evenings or what? How are you going to get capitalized? Okay. This one is a tougher one on the time frame, isn't it? Okay, we're on support here. You know, you calculate. I don't know. I don't know you personally, but just my guess is you're just doing it wrong over and over and over. 15 different ways of doing it wrong, and most likely you've been misled or misled by the wrong people, I guess, right? I still remember when I started, I just wanted to know how to do it. Just give me a little glimpse, just a glimmer of how to do it right, and then I got it. But there just wasn't anything out there. Well, let's say that works for stocks. Why does that? I'm not saying it does, but let's say you're correct on that. Can't trade it like stocks. Why does it work for stocks? Recalculate time. And feel free to, if you're listening to the conversation, feel free to answer. It's a question for everyone. If that is true, why does it work for stocks? Anybody? Well, the main reason is the way that institutions, right, invest. And many investment institutions are investing retirement money that comes out of your check every paycheck automatically. right? And they take that money and it's their job to invest it, like a mutual fund, for example, inside your retirement account. So that money manager gets the $500 and then they buy the stock in the mutual fund. And then the next month or next paycheck, another $500, and then they buy the stock in the mutual fund. And it's just ongoing, month after month after month after month after month. Month after month after month. Just more money just keeps in regular basis, right? 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 And therefore there's this tailwind pushing behind stocks that every month a little more money goes into the stock market. That's all. And many of these ETFs and mutual funds, they're passive. They're not like take profit today, buy back tomorrow. No, they just accumulate more. And so more money comes in every month. So they accumulate more every month. It's just, so there's this tailwind propping up the stock market. Very few market participants make money actually shorting stock. Very few. And those stocks are probably not in your mutual fund anyways. So that props the stock market up. And you have to have an economic slowdown for the stock market to come down in general. Okay, great. Now, in Forex, we're looking at euro yen. You can sell this as easily as you can buy it. In fact, it's indifferent. See, like when you short Apple, okay, when you short Apple, you have to go and borrow the Apple shares from someone else and pay them probably 8%. And then you take those borrowed shares and you get short and you make money, and then you got to pay all this back, and it's complicated, it's expensive, and it's dangerous. Almost nobody does it statistically. Nobody does it statistically. Hedge funds do it and a few others, but statistically irrelevant. The stock market comes down because the economy slows and profits go away, and people take profit. There's a difference between taking profit and short selling. Now, going into euro yen, being short is precisely the opposite, but equal to being long. If you're long, you're buying euro and selling yen. And if you're short, you're selling euro and buying yen. There's no headwind or tailwind propping up any of these assets. So you have to just understand which way the wind is blowing. Okay? But not having a risk management strategy is not healthy. It's not financially healthy. I would never recommend someone not have a risk management strategy. Okay? So there are things that could have been done, of course. Okay, cool. So at the very least, I would have, let's say, I would start with swing trading, and I'd do a 150-300 OCO. And I'd have recalculate time, do 30 trades. You make the trades. You don't manage any risk because you're not managing the risk now. Okay? Yeah, so even the attitude, look, I don't mean this. I mean it, but I don't mean it in a mean way. Okay, but like this idea, like you're not willing to use a stop loss because you think your broker's going to trade against you, then you need a new broker. Like that doesn't make any sense to me. So it's more likely emotional, but whatever. Let's go back to what I was saying. I'd have you make 30 trades. Every time you pull the trigger, it drops 150 pips stop and a 300 pip limit. And after 30 trades, we look at your statistics. If the majority are losers, your strategy sucks. And we can work on that. If the majority are winners, then your risk management sucks. And we can work on that. Okay? So you just need a better model, that's all. Why do most businesses go out of business? Because they suck at managing businesses. People get into like, I'm going to open up a frozen yogurt shop and put my life savings into it. I'm going to have retirement income. Have you ever run a business before? No. You've never done marketing or advertising? You don't have a... No. Do you understand finance and how money works and how working with investors and bankers work? No. Have you ever negotiated a commercial lease? No. Do you know anything about finance? So you can manage your books and investments? No. Do you understand the economy? So you know, like, so you can prepare for when the economy might slow down or when the economy is going to speed up and maybe you want to... No. I just want to sell frozen yogurt and make money in my retirement. Guess what? These guys go out of business, not because frozen yogurt is not popular. It's because they don't know how to run a business. So you might be a half-decent trader, but you're just not managing your trading business properly. That's all recalculate time. And I think we could fix that. But you might be out. You might be tapped out. 36K is a lot of money. Yeah, you could have gone to Harvard for 9 months. Yeah. So to me, it's just a business management issue. Yeah. Well, that's cool, recalculate, but you know, I'm a busy dude, so I hope you do it, and I hope you analyze it, and then I hope you use it as information. You can report back to me, that's cool. You don't have any money, I don't have any time, so I can't really take it further than that. Although FX Bootcamp could help you, but it's going to be $300. But again, if you don't got it, all right. I guess we'll just go. It's a long week, man. Holy crap, it's a long week. And I'm really excited about not the stock market open. I'm excited about the Fed testimony in about a half an hour or so. I would sit and have a cigar and watch it with you, but I don't think we have good weather out there today. It might be interesting to watch some of it. These testimonies are depressing. There's nothing more depressing than watching the leadership of your government that dictates the structure of your social lives, the society, and your lives, not your dating, and find out these guys are knuckleheads. How the hell did these guys get in charge? Well, you should see the people that didn't run. So anyways, it's very depressing. But at the end of the day, you're like, well, I'll let them do them. They can, right? You do you type of thing. Them do them. And you're instead going to be a patient and disciplined, focused, driven, independent trader and investor. You're going to take care of your money and your loved ones and your community, and everyone else is on their frickin' own. They're on their own. You can't save everybody. Sorry, buddy, only 2 giraffes on the ark. Can you imagine? There should be a movie about that. The animals that didn't get on the ark. You're like, well, just one more giraffe. Just one more giraffe. Nope, sorry. 2 giraffes only. All right, you can't help everybody. So you need to start with yourself and work your way out, and then your spouse and your children, and then your family and your neighbors and your community, and then, and if you want to help more people, you need to make more money. Unfortunately, that's how the world works. If you want to have a bigger positive impact on the world and society, make some money. Good intents only go so far. Your personal time only goes so far. Ultimately, right? The food shelter appreciates it when you work in the kitchen and you scoop mashed potatoes onto a plate. That's really nice. But you know what the food shelter needs? Money. See what happens when you give the food shelter $1 million. Yeah. So anyways, if you got to leverage, and that means you need to find a sustainable business model in which you enter the world of finance and financial markets and have consistent low-risk returns that can grow over time. And then you can take care of the people you love. That should be the focus. So I will see you later. I got to go do this. Thing we call Jay Powell testimony. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. Sharp, sharp.